Meme coins are moving again. Is this a signal of a new crypto bull run? The cryptocurrency market is once again showing signs of life, and one of the most noticeable movements is coming from meme coins. Assets that were once considered jokes or short-term hype plays are suddenly gaining momentum. This has sparked an important question among investors and crypto enthusiasts. Are rising meme coins an early signal of a broader crypto market rally? Let's explore what's happening and what it could mean for the future of the crypto market. The return of meme coin momentum. Meme coins such as Dogecoin, Shiba Inu, Pepe, and several newer tokens have started to show unexpected price increases and trading volume spikes. Social media platforms are buzzing again with discussions, memes, and predictions. Historically, meme coins tend to move when market sentiment turns positive. Retail investors re-enter the market. Speculative trading increases. Bitcoin and Ethereum stabilize after long consolidations. Their movement is often emotional rather than technical, driven by hype, community energy, and fear of missing out FOMO. Why meme coins matter in the crypto market. Although meme coins are not backed by strong fundamentals in most cases, they play an important psychological role in the crypto ecosystem. When meme coins start pumping, it usually means retail traders are becoming active again. Risk appetite is increasing. Confidence is returning to the market. In previous cycles, meme coin rallies often preceded or accompanied major bull runs in Bitcoin and altcoins. Is this a sign of a bigger crypto rally? Many analysts believe meme coin activity can act as an early indicator of a market shift. However, it is not a guarantee. Here are a few scenarios. 1. Early bull market signal. If Bitcoin continues to hold strong support levels and institutional interest remains steady, meme coin movement could indicate the early stages of a bull market. 2. Short-term speculative pump. In some cases, meme coins rally temporarily due to hype and quickly cool off without affecting the wider market. 3. Liquidity test. Meme coins often absorb excess liquidity first. If money continues flowing into larger altcoins afterward, it strengthens the bullish case. Risks investors should not ignore. While meme coins can deliver fast gains, they also come with serious risks. Extreme volatility. Lack of real-world utility. Sudden crashes due to whale sell-offs. Heavy dependence on social media hype. Investors should avoid emotional decisions and never invest more than they can afford to lose. Smart approach during meme coin hype. If you're observing this trend, consider the following strategy. Use meme coins only for short-term trades, not long-term investments. Focus on strong projects like Bitcoin and Ethereum for stability. Watch overall market volume and dominance charts. Always manage risk with stop losses. Meme coins can be profitable, but discipline is essential. Final thoughts. The recent movement in meme coins is definitely worth paying attention to, but it should not be the only factor guiding investment decisions. While history suggests that meme coin rallies often align with bullish market phases, confirmation from major cryptocurrencies is still necessary. For now, meme coins are sending a message. Market sentiment is changing, and crypto traders are waking up again. Whether this turns into a full bull run or just a temporary wave remains to be seen. How market sentiment is shifting in 2025. One of the strongest indicators in crypto is sentiment. And right now, sentiment appears to be slowly shifting from fear to cautious optimism. On-chain data shows increasing wallet activity, higher transaction counts, and renewed interest from retail traders. Search trends related to meme coins, altcoin season, and crypto bull run are also rising. This usually happens when people who left the market during bearish phases start paying attention again. Meme coins often benefit first from this emotional shift because they are easy to understand, inexpensive per unit, and heavily promoted on social media. The role of social media and influencers. Social platforms like X, Twitter, TikTok, Reddit, and Telegram are once again playing a major role in pushing meme coins forward. Influencers' viral posts and community-driven hype can cause prices to move rapidly within hours. However, this also means price movements can be irrational. News spreads extremely fast. Corrections can be brutal. This environment favors traders who stay informed and disciplined rather than those chasing hype blindly. What Bitcoin and Ethereum are telling us. While meme coins attract attention, Bitcoin and Ethereum still control the market's direction. Key signals to watch. Bitcoin holding above major support levels. Ethereum gaining strength against Bitcoin. Stablecoin inflows increasing. Declining Bitcoin dominance. Often a sign altcoins may rise. If meme coins rise while Bitcoin remains stable or slowly climbs, it strengthens the argument for a broader market recovery. Are institutions paying attention? Institutional investors usually avoid meme coins, but they pay close attention to retail behavior. Sudden increases in speculative trading often signal upcoming volatility or momentum in larger assets. If institutions notice sustained retail interest, they may increase exposure to Bitcoin ETFs, Layer 1 blockchains, AI and utility-based crypto projects. This chain reaction can eventually lift the entire market. How beginners should react right now. For beginners, this phase can be confusing and risky. The best approach is observation first, action later. Smart beginner tips. Learn market cycles before investing. Avoid buying coins already up 200 to 300%. Focus on education, not quick profits. Diversify instead of going all in. Remember, surviving the market is more important than chasing fast gains. Long-term perspective, beyond the hype. Meme coins may come and go, but the crypto market continues to evolve. Technologies like blockchain scalability, decentralized finance DeFi, tokenization of real-world assets, AI integration with crypto will shape the next major cycle far more than short-term hype. Meme coins can act as a spark, but long-term value comes from innovation. Final conclusion. The renewed movement in meme coins is not something to ignore, but it should be viewed with caution and context. It reflects changing sentiment, rising speculation, and returning retail interest. Whether this leads to a full crypto bull run or a temporary surge will depend on Bitcoin stability, global economic conditions, market liquidity, investor discipline. For now, one thing is clear. Crypto is waking up again, and meme coins are ringing the alarm bell. Psychological patterns behind meme coin pumps. Meme coin rallies are deeply connected to human psychology. Unlike traditional assets, meme coins thrive on emotions such as excitement, curiosity, and the fear of missing out. When traders see small investments turning into big return for others, logic often takes a backseat. This behavior creates a chain reaction. Early buyers post profits on social media. New investors rush in. Prices spike rapidly. Late buyers face higher risk. Understanding the psychological cycle can help investors avoid entering at the worst possible time. The influence of market liquidity. Liquidity plays a major role in meme coin movements. During bearish markets, liquidity is low and traders are cautious. As liquidity slowly returns, it often flows. High risk, high reward assets, including meme coins. When liquidity continues to grow, meme coins rise first. Mid-cap altcoins follow. Large-cap coins move last but more sustainably. This pattern has repeated across multiple crypto cycles. On-chain data signals to watch. For experienced investors, on-chain data offers valuable insight into whether the current movement has strength or is just temporary hype. Important indicators include growth in active wallet addresses, increase in transaction volume, reduce exchange outflows, whale accumulation patterns. If meme coin activity is supported by improving on-chain metrics, the rally may have more depth than it appears. Global economic factors affecting crypto sentiment. Crypto does not exist in isolation. Global economic conditions strongly influence market behavior. Factors to watch. Interest rate decisions, inflation trends, stock market performance, geopolitical stability. When traditional markets show signs of easing pressure, investors often turn back to alternative assets like crypto. The danger of overconfidence. One of the biggest dangers during early market rallies is overconfidence. A few successful trades can make investors believe every decision will be profitable. This mindset often leads to ignoring risk management, over-leveraging positions, holding during sharp reversals. Staying humble and cautious is essential, especially when dealing with speculative assets like meme coins. Building a balanced crypto strategy. Instead of chasing trends blindly, smart investors build a balanced approach. A sensible strategy may include core holdings in Bitcoin and Ethereum, limited exposure to meme coins, medium-risk altcoins with real utility, cash reserves from market dips. This approach helps protect capital while still allowing room for opportunity. The role of patience in crypto success. Patience is often underestimated in crypto trading. Many investors lose money not because the market is against them, but because they act too quickly. Waiting for confirmation, proper entries, and clear trends can dramatically improve long-term results. What history teaches us. Every crypto cycle looks different, but human behavior remains the same. In past cycles, meme coins surged before altcoin seasons. Retail investors entered late. Markets corrected sharply before true bull runs. Learning from history can prevent repeating costly mistakes. Extended final thoughts. The current activity in meme coins is a reminder that crypto markets move in waves of emotion, speculation, and opportunity. While these movements can be exciting, they require awareness and discipline. Rather than asking, how fast can I profit? A better question is, how can I survive and grow in the long run? Meme coins may signal the beginning of something bigger, but only time, data, and smart decision-making will confirm it. How social communities drive meme coin surges. One of the most fascinating aspects of meme coins is the power of online communities. Platforms like Reddit, X, formerly Twitter, Discord, and Telegram often act as a heartbeat of these markets. When thousands of small investors coordinate their actions, even a coin with little fundamental value can experience massive price movements. Key dynamics include viral challenges and memes. Funny or trending content can trigger massive engagement. Influencer endorsements. A single tweet or post from a well-followed figure can move prices dramatically. FOMO loops. Seeing others profit creates a snowball effect, pushing more people to buy quickly. Understanding these forces helps investors anticipate short-term spikes and avoid panic-driven decisions. Case study, Dogecoin and Shiba Inu. Historical examples provide insight into how meme coins behave. Dogecoin. Doge started as a joke, but surged in 2021 due to Elon Musk's tweets and massive community support. Early investors saw gains of thousands of %, while latecomers experienced heavy losses during corrections. Shiba Inu, SHIB, also experienced explosive growth fueled purely by hype and social sentiment. Its rise demonstrated how community-driven coins can attract global attention even without strong fundamentals. These cases illustrate the dual nature of meme coins, huge upside potential and high risk. Timing your entry. Key tips. If you plan to explore meme coins during this renewed interest, timing is crucial. Here are practical tips. Monitor social signals. Track trending coins on X, Reddit, and Telegram. Rising chatter often precedes price surges. Check on-chain activity. Look for wallet accumulation and transaction growth. These suggest genuine interest rather than a pump and dump. Start small. Allocate only a small portion of your portfolio to meme coins. Set exit points. Predetermine profit targets and stop-loss levels to protect capital. Stay informed. Follow news, regulatory updates, and market sentiment. Rapid changes can occur at any time. Regulatory landscape and its impact. Regulations can have an immediate effect on meme coins. Governments worldwide are increasingly monitoring crypto markets. Factors to consider. Crackdowns on speculative trading can reduce short-term hype. Exchange delistings of certain coins can trigger sudden price drops. Tax policies can affect investor behavior and liquidity. Investors should stay aware of legal updates in major markets like the USA, UK, EU, and Asia to avoid surprises. The future of meme coins. While some skeptics believe meme coins are just short-term hype, others see potential evolution. Integration with DeFi. Meme coins gain utility by participating in decentralized finance protocols. NFT collaborations. Some coins are partnered with NFT projects, giving them tangible use cases. Metaverse adoption. Meme coins may find new life as tokens in virtual worlds or games. These trends could redefine how the market perceives meme coins in the next cycle. Practical advice for long-term crypto investors. While meme coins provide excitement and potential short-term gains, long-term crypto investors should focus on stability. Maintain core holdings in Bitcoin, Ethereum, and other strong altcoins. Use meme coins only for controlled speculative trades. Diversify across sectors like DeFi, NFTs, and Layer 1 blockchains. Avoid emotional trading based on hype or fear. Remember, surviving market volatility is more important than chasing every rally. Key takeaways. Meme coins are moving again, signaling renewed retail interest. They often reflect emotional market behavior rather than fundamentals. Bitcoin and Ethereum remain the market's true bellwethers. Social media, liquidity, and investor psychology drive short-term surges. Risk management, patience, and research are crucial for success. In short, meme coins can be exciting and profitable, but they are not a guarantee of a bull market. Investors should stay cautious, disciplined, and informed. Final words. Stay smart, not hasty. The crypto market is alive, unpredictable, and full of opportunities. Meme coins may be flashing early signals of optimism, but they also test the patience, discipline, and emotional control of traders. Smart investors focus on strategy over hype, data over emotion, and long-term growth over instant gratification. As the market evolves, those who stay informed and disciplined are likely to benefit the most, whether the meme coin surge turns into a broader crypto rally or not.